Welcome to Goldstone Finvest. I'm Prabhat Majumdar. I would share today's market update. Today on Tuesday, Indian market started the day with handsome gains, but pressure at higher levels, especially above 15,000 for the Nifty, led to some selling towards the close of the trade. Some of the factors that weighed on the market were rise in crude oil prices, increase in COVID cases, sell-off seen from foreign investors, and volatile US bond yields ahead of the outcome of the US Fed policy meeting. Thus, it was observed that Indian market was under pressure due to rising crude prices and selling by both FIIs and DIIs. We can expect FII selling to come down post the Fed policy met outcome and US bond yields to ease as an accommodative outlook is expected. The domestic sentiment is suppressed due to the rising COVID-19 cases and weak macro data like IIP and inflation. Analysts said that 3 straight days of fall pushed Nifty below its crucial support placed at 15,000. The index has fallen by about 2%, closing at 15,174. Let's look at the final tally on D Street. The S&P and BSE Sensex fell 31 points to 50,363, while the Nifty closed 19 points lower at 14,910. The Nifty wiped out gains in afternoon trade and closed moderately lower, forming a small bearish candle on the daily charts. The rising coronavirus infections, higher oil prices and FIIs as well as DIIs outflow dented sentiment. The bearish candle gets formed when the closing is lower than opening levels. Experts expect the selling pressure to extend if the index fails to come back above the crucial 15,000 mark in the coming sessions. Researchers said that sell-off in the second half of the session erased all the intraday gains, with the benchmark indices ending flat. At close, the S&P BSE Sensex fell 31 points to 50,363, while the Nifty closed 19 points lower at 14,910. Analysts view that the Nifty formed a bearish candle on daily scale and continued its weakness for the third consecutive session. Additionally, they said that the Nifty has to decisively cross and hold above 15,000 zones to witness an up move towards 15,150 and 15,250 zones, while on the downside major support exists at 14,750 then 14,600 levels. India VIX declined by almost 4%. A fall in VIX below 20 levels is required for bullish grip and smoother move in the market. Looking at the options data suggests Nifty could trade in a range of 14,700 to 15,200 levels in the coming sessions. Maximum put open interest was seen at 14,000 followed by 14,500 strike, while maximum call open interest was seen at 16,000 followed by 15,500 strike. Call writing was seen at 15,000 then 15,400 strike, while put writing was seen at 14,800 then 14,600 strike. Bank Nifty opened positive at 35,352 but has been moving southwards since its opening levels. Even though it respected its immediate support levels and did not breach yesterday's low, a clear trend needs to emerge, experts feel. The index underperformed the Nifty index and settled the day with losses of almost 377 at 34,804 points, forming a bearish candle on daily scale with negligible shadows. Bank Nifty has to cross and hold above 35,000 to witness an up move towards 35,500 and 36,000 levels, while on the downside support is seen at 34,500 then 34,000 levels. Among sectors, Nifty Bank, PSU Bank and metal indices shed almost 1%, while FMCG and IT index added almost 1% each. The broader indices outperformed the benchmarks with BSE mid cap and small cap indices ending in the green. On BSE, the IT index rose 1% while the FMCG pack added 0.9%. realty, metal, oil and gas and capital goods indices ended in the red. What must a trader do for tomorrow? Experts analyze that the Nifty formed a bearish candle on a daily scale and continued its weakness for the third consecutive session. Now, Nifty has to decisively cross and hold above 15,000 to witness an up move towards 15,150 and 15,250, while on the downside, major support exists at 14,750 and then at 14,600 levels. The market failed to show resilience to stay above 15,000 on the Nifty. While it is subject to further price action evolution, the technical factors signal a lackluster market movement going forward. Adding further, our team suggests that any corrective wave should find support around 14,750. Traders are advised to refrain from building fresh buying position until Nifty corrects to 14,750 levels. The volatility observed in Tuesday's session indicates profit booking and distribution of stocks at a higher market level. The index opened the day with gains but was not able to hold the gains and closed the day at 14,910 with mild losses and formed a bearish candle on the daily chart. On the higher side, 15,000 to 15,050 zone is a strong hurdle. Market has been witnessing selling pressures from these levels. Going forward, for fresh upside, the index needs to sustain above 15,050 zone. The immediate support is near 14,800 to 14,750 and any break below said levels can increase selling pressure. The short-term trend for Nifty is choppy as the market is struggling to sustain the intraday gains. One may expect similar sideways movement with lower levels of recovery for the next session. Researchers further added to the research that the overall chart pattern of intraday 60 minutes daily time frame signals chances of an upside bounce from here or from the lows in the short term. Immediate resistance is placed at 15,050. As stated by Goldstone experts, traders should trade extremely cautiously with strict stop losses and should follow support and resistance levels on strict basis. Traders are advised to refrain from building fresh buying position until Nifty corrects to 14,750 levels. Follow support and resistance levels along with trading call as published on our Telegram channel. For regular updates, like, share and subscribe our YouTube and Telegram channel. Also be a part of our Facebook family. Views by Goldstone Finvest. Let's build fortune together.